Hey traders, do you struggle with consistently applying and following your rules? If you do, you're like most traders. In today's session of Trade Your Way to Wealth and Financial Freedom, we cover some tips on how to work around that and how to actually start trusting your system more. Plus, we've got a bonus stock, 4 of them this weekend, that you're going to want to take a look at because they could provide you some tremendous upside going into this strong market next week. So let's get down to business right now.
Hey, good afternoon, everybody. This is Dennis Wilburn, the AutoPilot Trader. I just want to welcome you to today's session of Trade Your Way to Wealth, Financial Freedom. We're going to be taking a look at some stock picks. Anil is joining me today. Good afternoon, Anil.
Good afternoon. Good to be here.
And Anil said he just completed cataract surgery on one of his other eyes. He has 2, and I'm really proud. Basically, you can see clearly, right?
Yeah, I can see very clearly, distant, near my computer.
Oh, awesome.
No more glasses.
So I want to say aloha, good afternoon to everybody. I've got Steve Grant and Jeffrey over there on the YouTube channel. Good morning, gentlemen, or good afternoon, wherever you are. If you do have any questions over there, please give us a shout out. I want to welcome you to today's session. We have a market that just looks like it is wanting to go a little bit higher, and it's pressing upward and upward and upward. And so one of the questions I want to ask going into today is, I think one of the largest, and you can confirm this for me if you will, and just put it down in the chat box or in the chat box on YouTube, is one of the biggest challenges I think traders have is basically consistently applying and following their rule. If you agree with that, just type in a yes or a no. Just let me know what you think about that. Or if you say, hey, no, here's my biggest issue with consistency, type that in also. That helps. That helps me also structure some of the videos and tutorials I'll be doing in the near future on the YouTube channel. Wilborn Total Wellness. Well, welcome aboard over there. You're up awful early. That's my oldest son. He's over in Korea. So yes, hey Justin. So if you would, just drop that in the notes, and we'll just go ahead and jump into today's session. Remember, all the materials we do present are for training purposes. Traders should always pay per trade any new method prior to the risk of their personal capital. What about you, Anil? What is your, if you could correct 1 or 2 things, what would they be to improve your consistency?
I need to 100% believe in the system.
Okay.
When I second guess, it's happened to me in this particular rally. There were so many darn good signals, but if I don't take action right there and then, same day or something, 3 days later, it's just gone away from me.
That's absolutely phenomenal. That's a great answer. For a couple of reasons. One of the reasons is that I was doing some studying this past week, and I was reading this author that was talking about the market. He said that one of the things we want to teach ourselves how to do is act as fast as you can once you have your specific trigger.
Exactly.
And so if you are trading a trigger of a momentum shift, what does that look like? Is that a momentum shift on a daily chart? Is it a momentum shift on a weekly chart? Which is it? And so I have homework for everybody. Here's your task for the weekend if you choose to accept it. Take some time, get your journal out, or just get out a piece of paper and draw out what your trigger is. You may need to print out a chart and say, okay, especially in the recent rally, where should your trigger have been? If you missed out on some of this rally, where should your trigger have been? And if you would have, basically in 2020 hindsight, what could you have done differently to be able to jump onto the current thing. So that's the task for this weekend is, one of the things that I think is there's 5 items that I want to be looking at. I want to be looking at trend. I want to be looking at the momentum reversal, candlestick reversal. Am I at support and / or resistance? And am I getting confirmation on a longer term chart? Those are 5 things that if I apply those, it helps me be more consistent in, consistent entries based on consistently applying your rules will lead to consistent results and at least a little bit more predictable results. So excellent. So let's jump in. Here's where we're sitting as of last week, where we're sitting as of right now. There's one thing I want to show you. If you can see last week, we had these red boxes circling both the NASDAQ and the Russell, and guess what? This week they are gonzo. None of the indexes right now are in a defined bear market. Now, are we getting to participate in the rallies? I don't know. I mean, hopefully we are. I know we have been doing so in our active trend trading. We also pleased with how well we're doing so far. With the year not even, just a little bit over halfway over, I'm already hitting 35%. And my target for the year is 40%. Normally, if I'm this far ahead of schedule, I'll be looking at probably 60 to 65% by the end of the year. So I'm pleased with that. Jump into our market review, and then we're going to be jumping. Steve's not going to be joining us today, guys, because he had something he had to take care of. But he's left the stock picking to Anil and I, and Anil and I have 4 or maybe more stocks to be able to take a look at, to give you some suggestion going into the weekend. Let's go ahead and take a look first at the S&P, or the spiders representing the S&P. So what do we have going on here? Well, as you can see, what is happening is we're getting a press back up. We broke out of the 100% extension off of this move here. So we have a symmetric move. We are approaching a level of resistance by the Fibonacci at the 427 level, and also resistance that is this past high over here, which is just slightly above that, but it's starting to coincide with the resistance that'll be in place from the 200-day moving average. And so we have not broken above the 200-day moving average. However, it is looking exceptionally good that we may, in fact, do that. One of the things that I will keep in mind, and Anil, I'm sure you will also, is what happens on the indexes as they approach some of these stronger overhead resistance area. If they blow right through them, then I would anticipate a move on up towards the yearly past high, which for this is up here about the 466 level. So if we did go from where we're at right now up to that level, that's only about another 9 to 10%. If we get up all the way to the high, about 12% on the S&P. If you're looking at trading the S&P, I would be looking at some kind of pullback into the midsection of today's candle, or this week's candle, excuse me. Look what transpires, and this is something you can almost count on happening regularly, is the price action for the week. Even on this nice rally that's going on, the price action for the week get a pullback a little bit into the body or into the candlestick from the previous week. We saw it here, here, and here. And so if we want to target an entry, a prudent entry, we would want to be looking somewhere in the midsection of today's candle. You may want to take a look at the 8-day moving average for that. So that's what we've got going with the spiders. Next, NASDAQ, I think, will provide us some guidance on what's going to be happening overall with the market. Again, how far does it have to run to get back up to the highs for the year? About 24%. Remember, it has been beat down worse than the S&P So about 24%. That's also a really excellent idea. And I just want to highlight this to you really quick, is from the high of just before the new year to today's current price. Okay, if you look, that equates to about 19%. However, to regain the high, and this is one of the things I talk about why it's important to keep your losses controlled, to retain the high, it's 24%. So if you lose 50%, it takes 100+% to make up the difference. So just keep that in mind. Anil, what I'm looking at here, I've got a couple of things that are, I won't say of concern, but we've had the momentum on the daily chart cut below the 40 line here, 42 line. We still have the good momentum looking on the market forecast. Secondly, strong move up, accelerating move up, as we see on the weekly chart. My trigger right now is just any kind of a pullback into or towards the 8-day moving average, which is about the 322 level, or just a little bit higher than that, probably about the 324 level would be an ideal area for me to want to trade into the NASDAQ or the Qs. NASDAQ, to continue on, needs to break out of that level right there. And I'll show you what it looks like on the NASDAQ itself. And on the NASDAQ, that is just a little bit over, that's that 13,556. That is the level that needs to be broken out. It needs to break out of that in order to continue on up. Notice that it also needs to run a little bit harder to break out of the 200-day moving average. We're still below the 200-day moving average on that entity. Russell, real quick, as represented by IWM. IWM, it is ramming its head right up against the 200-day moving average. Look for some kind of a pullback again. One of the things the other things that I have been studying is if you get a move up like this on your TSI or on your momentum indicator, where it is just basically a very steep incline, that is a measure of velocity of move, and it's also indicating it's a very strong uptrend that is going on. Now, will it do a pullback to get a bounce up higher? Yeah, we'll have to take a look. That's definitely a potential. Also, over the past weeks and so, notice how once it started its uptrend, the following week would get a retreat into the body of the previous week's candlestick and then bounce higher. And it seems to hit right into about the middle third. So if we apply the same type of aspect on that, look for something on the IWM, somewhere between 196.50 and I would say that line right there, which is the 194.32, 194.32. So that's what I've got on. Basically, I'm good to go to the bullish side, Anil. What's your thoughts?
Yeah, same thing here, because I'm looking at my triple screen system, and on QQQs I had triple screen signal at least a couple of weeks ago, and now the weekly signal is about to come. The MACD has gone bullish, RSI has gone bullish, and I'm waiting for the 820 cross, but it looks very promising.
Okay, excellent. Thank you. And so the 820 cross, yeah, I mean, things are just really shaping up. And so me as a pullback trader, I have to be aware of where my anticipated pullback would be. And as you can see, with the power of this move, it's not even pulling back to the 8-day moving average. So keep that in mind. So let's take a look at some stocks. Anybody have any questions or anything like that? If you have any questions, just drop them into the chat box. Appreciate that. The first stock that Anil has is JB Hunt. What's the story on JB Hunt?
Looks very strong, and I have a weekly signal this week.
Okay.
They are the full load trucking business, doing good.
Okay. Awesome. So are you going to wait for any kind of a pullback, or you're already in the position?
I bought it yesterday.
Okay. And so do you think it's still buyable right now?
Yeah, because if you look at markets with it, it still has ways to go before it breaks out.
Okay. Excellent. Yeah, this would have been an early entry, and so so your 5% stop loss would be down about 183 if you bought it right here.
Yeah.
And so excellent. Yeah, nice strong move up to the upside. And if you're a pullback trader, because like I said, a pullback down to this level would get you out very quickly. But yeah, this is looking very good. Volume is at the average volume, and so an indication that we are getting bought. Here's my first stock, Merck. I've come back to Merck. Merck has won a bullish engulfing pattern on the weekly chart. TSI is starting to turn up. So this is my momentum shifting to the upside at a level of strong support. You can see my daily chart has already, started up, and we're rebounding. I will be a buyer of Merck anywhere from about $90 down to $89. And my stop loss on this would be down at about, if I take out that low at $87, that would be my stop loss. It'd be about a 4% stop loss. What's your triple screen say on this one?
No, it looks good. Merck had a active weekly signal since long time, actually.
Okay. What was the other one that you had, Anil? Bro, I remember it was.
Bro, it's B as in boy, R-O. Chart pattern about same as the other one. It's still in base, and I got a strong triple screen signal this week. So I'm buying early.
Okay. Now, where is the Investor Business Daily buy point on this one right now?
It's about 2% to pivot. So
okay. So that's about from here.
It's right at the top.
Okay, right at the top. So
yeah, right at the top.
Again, that early entry that Anil is using jumps him in, and he is, he's not early to the ball game. Actually, he's right on time. Yeah, I like this one. Also has what kind of earnings? Volume's a little bit over 1 million shares. So I like it. Bro, again, if you're a pullback trader, you look a pullback into probably the 8-day moving average, or for the 8-day moving average to catch up with it. Either way, if you bought it right here and just use the last swing low as your stop loss, you'd be stopping out at about 6.8%. My next one it's showing some strength, and it hasn't had some strength for a while, and that's JP Morgan. It has made the shift, and again, excellent positive divergence, as you can see right there on the momentum, as it makes a new low, and we are breaking up above the trend line. So any kind of a pullback back into the 20-day moving average, or even the 119 level, would be a potential area to jump on a trade. We also have right here this gap up. That is also an excellent area of support that should not be breached to the downside. So I like this one. So from where it's at right now to the midsection of that gap up is about 4%. I would like to get this a little bit closer to, let's say, 120-ish, about $1.40 away, and anticipate a move back up. But on initial look, this is getting an excellent surge of momentum up to the upside. And you can just take a look at this, the candlestick from the week. If it reacts the same way a lot of these other ones, look for the pullback into the middle third of the weekly candlestick. So that would put us somewhere about 119.50 to 120 for a potential entry. It's looking like it wants to continue to move higher. It's got a heck of a long ways before it hits the 200-day moving average. But even if it just gets back to these past highs, that would be about a $10, 8 to 9% run. So what do you think, Anil?
Looks good.
Okay, guys, anybody have a stock? I'll take time to take a look at one or two stocks, and then we got to jump on to the rest of the session.
Just check your JPM on the triple screen. Now you have a triple screen signal on daily. Weekly.
Okay.
Will
so
also
it's
come shortly.
Yeah, I mean, like I said, you want to be in as early as possible, as early as you can get into when it has the momentum shift. And so it had the momentum shift this week and got accelerated. So that would be, this could go on up to that 132 level. You could be in a formation of a longer term uptrend. So yeah, I like it. So we have one Sabre. It's starting to move on up. It's got pretty good. Yeah, it's got pretty good volume. What does Sabre do? Sabre Corp. What do they do, Justin? Excuse me. Yeah, it has a really good technical looking chart coming out of a base. You can basically draw these lines across here. It is just breaking out. So the expected move on this is about twice that 243. So if we go up another 243 from there, you're up about $10 on this, and that's where you run into past resistance. Current move up to past resistance is about 26%. See, Marcus Smith shows Bro at 65.70 for the buy point. Yeah, Sabre. Thank you, Ashraf. Appreciate that. Okay, guys, that basically, we're going to call it a day so we can respect your time. And I'll, Neil, thanks for the flexibility on having a secondary pick there.
No problem. It's fun.
And so, hey, what's track of my stock picks? I've had 31 of them through the first part of August. And with a win-loss ratio of 74%, a risk-reward, which I think is you have to take those two together, because you can have a win-loss ratio of 74, which is good, nice. 65 to 75 is exceptional. But if your reward risk isn't, like this is for every dollar risk, I was making $4. If that's not in place, you could actually have that high of a win-loss ratio, still be upside down on your trading. So love what Jeff Livermore has to say here. And he's talking about how the reason the charts are the way they are is because the markets are driven by humans and human nature never changes, was an absolutely true statement. Hey, if you want to learn how to trade the leverage ETFs, we've been doing this, trying to take advantage and carve out the middle part of the sirloin there. And if you have done that, this is TQQ for part of last year. And as you can see, these moves it makes are exceptional. And even if you capture and just cut out the part in the middle, it would compound at 113%. And that's what I try to do with the AutoPilot Trading. I want to provide us an opportunity to have things where they compound at least 40% or better for the year. Prefer the 100. But if you spend a lot of time, over 2 hours a week, finding strong trade setups, then you need to check out AutoPilot Trading. There's the link down there, and there'll be a link in the description on the YouTube channel. Also, when I send out the emails, and you want to take a snapshot of that. So that's basically all I have. Anil, do you have any other suggestions as we enter into this next phase of the market?
No, it looks great. I'm trying to build a position slowly on TQQQ very carefully.
Okay. I will remind everybody that on the 20th of August, there will be a special meetup webinar, and it's a virtual webinar across the complete world. It's sponsored by Amy Smith, a couple of the great traders in the meetup arena. And so if you need a link or an invite to that, just send me an email and I'll make sure that you get that. And I'll also post that on the meetup, Bay Area Moneymaker meetup. If you are joining us over on the YouTube channel, I want to say thank you guys for being over there. And do me one favor. We do this basically every week to put on the Trade Your Way to Wealth and Financial Freedom. Don't ask for anything in return. The only thing I do ask is please provide a shout out for this sessions that we do every Friday at 11 a.m. Pacific time on your social media of choice, and just highlight and let me know you've done that. I appreciate that. Those who did it last week, thank you so much. And if you're not a subscriber to the YouTube channel, please go over to Market Tech Talk, subscribe and hit the bell, and you will be reminded when we place some new tutorials over there. You have some really great tutorials coming down line. You're not going to want to miss. So with that,